Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on gold mining and exploration today. We will hear from Mark Brennan, CEO of Cerrado Gold. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this Cerrado Gold webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the company's corporate presentation. That can be found on the company's website, cerradogold.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for informational purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. And please see our most recent research located on the Red Cloud website for specific disclosures on Cerrado. So we have Cerrado presenting today. Cerrado's team has a strong background in the mining industry, particularly in South America, and they're now operating a gold and silver mine in Argentina and also have a very promising development stage gold project in Brazil. With that, I now turn it over to Mark to update our audience on the company.
Thank you, Tim, and thank you very much, ladies and gentlemen, for joining me on this call today and going through the Cerrado story. Cerrado is quite a new company. We were founded in 2017, late 2017, and basically we currently have two projects that we're working to drive value for shareholders. The first project that we acquired was the Monte Carmo project in Brazil. It's a development stage project with 1.3 million ounces of good grade, 1.85 grams per ton, open pit material that we're looking to put into development by the end of 2024. Unique to this project is that it has a very high grade and very low operating costs, according to a PA that we had published in September of 2021. Basically, for the first 5 years of production, we're looking at about 150,000 ounces per year at a cost all in of $431. And that falls within an 8-year mine life with an NPV of about $617 million, with a capex of $125 million, including a $25 million contingency. So from that perspective, we're looking at an extremely robust project that's still in its discovery phase, but we're looking to take that down a parallel path, one, to bring it into production very quickly, and two, to continue the path for significant exploration and resource growth. As Tim mentioned, we have a second project that we acquired in March of 2020 called Minera Don Nicolas in Argentina. It's in a very prolific gold belt where we're surrounded by significant and major mining companies. Basically, we acquired this project on the thesis that it would be able to produce for 8 or 9 years on the basis of 50,000 ounces per year on a base case at a cost of about $1,000 all in. We've now owned that project for a couple of years. We've completed a restructuring, and we're now, as per a press release issued in the fourth quarter of last year, we're now very comfortable with the go-forward normalized operations of 50,000 ounces a year on a base case. We actually published another press release about a month ago targeting 70,000 ounces in 2023 and 90,000 ounces of 2024. And the reason for that is that this too is also a very new project that has significant upside potential through exploration growth. This project, they've had $120 million put into the infrastructure prior to our acquiring the mine. And on top of that, we have about 433,000 hectares. It's a huge project in a very prolific belt. And our target is to use these projects to grow a significant mining company. We have a strong team basically, we're builders. We've been working together for 25 years. We started with Desert Sun Mining, which we took from basically a disheveled or a discontinued operation in Brazil in 2002. We sold it to Yamana Gold in 2007 for $700 million. We went on to Largo. We built the lowest cost, highest grade vanadium producer in the world, with now a market cap of about $1.2 billion. And then, I went over to Serra Metals and restructured Serra Metals from about a 200 million market cap to about a 600 million market cap between 15 and 17. And then we came to start the Cerrado story. We have a strong team in Brazil, in Argentina, in Toronto, to really emphasize the strong growth of this project. If you look at our immediate growth and capabilities at Cerrado itself, what we've seen is tremendous production growth in the very short period of time which we've owned the asset, even during a very restrictive and very difficult COVID period. And we've actually been able to bring our costs down very significantly. This specifically refers to MDN, but as we start adding the Brazilian operations, we see even stronger growth for a fairly substantive production profile growth that will get us to that 250 to 300,000 ounces by 2026, which basically would put us into a mid-tier producer. And our target here is to become a mid-tier producer, frankly, if we don't get acquired first. In terms of our valuation and one of the investment, the reasons why you should look at investment at Cerrado, we're a new company. We've been trading on the Toronto Venture Exchange for just over a year. Basically, we're widely unknown. And for that, I think we traded a significant discount to our peer group. And what I would mention here is not only should we be trading at the peer group level, in my view, but the quality of our assets are such that we see substantial advantages to many other producers, where the actual Brazilian asset will become the lowest cost producer of gold in the world. And I don't think that merits being at a peer level with at the same level as our peers. I think it should be trading at a premium to that, particularly when we have such a significant cost advantage and very, very low capex. With respect to how we're going to create that value, in MDN in Argentina, we're growing those operations very dramatically. We're going to be adding a heap leach opportunity to take us up another 20,000 ounces in 2023. We'll be adding in 24, we'll be adding another 20,000 ounces. And then basically we're looking at bringing in development of underground resources into the open pit play that we have now. And I'll talk to you a little bit about that as we go forward, but there's significant growth. As I mentioned, by 24, we're targeting to be producing 90,000 ounces a year from our target of 50,000 ounces today. And that 50,000 ounces should generate somewhere in the region of about 25 to 30 million of free cash flow to the operations this year. With regard to Brazil, we're targeting to move. We're currently in a feasibility study mode. And basically what we expect is to complete the feasibility study by Q1 of next year, to be in construction by the second quarter of 23, to be in production by Q4 of 2024. So from that regard, a very aggressive schedule on both projects, but at the same point, we're very comfortable with that schedule. If I look at Brazil, people ask, why is this this project so low cost, both on capex and opex? And first of all, I'll say that what we're looking at is a phenomenal jurisdiction. The Tocantins State in Brazil is a very wealthy state. It's actually one of the premier agricultural states in Brazil. So it's all relatively flat lying. They have undulating hills, which is where we find our geology. But for the most part, the infrastructure for sophisticated industrial agriculture leads the path for us to take advantage of. And so, 2 kilometers from our mine operations, there's a paved road. 3 kilometers, there's a town of 7,000 people who are very supportive of the project. 5 kilometers, we have a paved road, paved highway, the major paved highway through the state that runs to the capital of 300,000 people. And then 45 minutes in the other direction, you're at a town of 70,000 people. This is not in the jungle. It's actually very easy and very shrub-like landscape, and so it's a very easy material to move. We're looking at an open pit operation, and basically we're looking at the spoke and hub model where we have the spoke will be the mining, the actual production facilities, and then the hubs will be the different deposits. To date, the whole 1.3 million ounces is resting in one deposit, but we also have, running through the property, 69 kV power line. We have an estuary for major river. So all the ingredients here are all set from an infrastructure perspective. On top of that, the quality of the ore is very amenable to very cheap production. It's coarse gold, non-refractory, very easy to process, where 80% of the gold is recovered by gravity separation alone, which is extremely important. And on top of that, we add flotation to get us up to about 98%, which is a very strong recovery level. With respect to another point on this is, again, just to emphasize, we have the very, very strong support of the local community, which is critical in any mining operation. And likewise, we have the strong support of the state government. Unique, I think, to this project, and is that the fact is that we only have one jurisdiction that we need to deal with on a regulatory basis, and that is the state government, which just makes the ability to expedite the program that much easier. Here's a copy we have about 82,000 hectares, as you can see on the left side. Our first deposit is the Serra Alta deposit, which is just kind of at the northern part of the property. This deposit is about 1.5 kilometers long by about 400 meters across. And basically, what we're looking at is look at all the gray areas and the white areas. These are all historical Garimpero workings that were done by the conquistadors and Garimperos in the 1980s. And what it shows is that there's just a prolific amount of gold that people have gone out and taken at surface. And this is very similar to what we saw at Jacobina, which enabled us to move our resource when we acquired it from 2 million ounces up to about 4 million ounces. And we see a lot of this type of Garimpero workings throughout the property, throughout the 82,000 hectares, which leads us very strongly to believe that there's a lot more ounces here. I mentioned at the beginning, we published a preliminary economic assessment in September of this year. The numbers here are quite off the charts. I've never seen anything in my career quite this strong. For a project that is going to be costing about $125 million, we've got an NPV after tax of $617 million and an IRR of 95%. It means that our payback at $1,600 gold will be about 1.2 years on our capital. Currently, we have an 8-year mine life, producing on average over the 8 years 131,000 ounces. But the critical element here is that the first 5 years will produce about 150,000 ounces a year, and at $1,600 gold will generate 150 million of free cash on average per year. So basically, we're returning $750 million of free cash by the first 5 years of production. As I mentioned earlier, this is a very early stage project. We're still in discovery mode. So what we'll be doing between now and the construction, on top of developing the project, will be also significant exploration, which will drive our value. So we can add ounces, and our hope is that we get the first 5 years. We'll replicate that with the second 5 years, for 5 to 10, and then we get the third 5 years from 10 to 15, and we think that that's highly possible with the resources that we anticipate are available. I mentioned earlier, simple mining, open pit, high grade for Latin America at 1.85 grams. Processing really easy. Low operating costs because you have low retention time. There's nothing major that needs to be included. It's open pit mining. We're actually contract mining, which will reduce any form of inflation impact in terms of acquiring of a fleet. On top of that, on our capital costs, we budgeted for $100 million on the capex, but we've included 25 million to contingency, which I'm hopeful will cover any inflationary bumps that we're seeing in the markets today. But that said, it's just a very, very unique project in the very significant way that it can be developed. So if you look at our run rates here, this shows you the production profile. By 2027, we'll be north of 200,000 ounces of production here. Combine that with the operations we have in Argentina, which we target being approximately 100,000 ounces. We're certainly a major company very, very quickly in terms of our life cycle. We have some peer groups that we have here, and basically, if you look at the different metrics, it just shows you I'm not going to go through them all, but basically, we have a very low capex. We got a very high rate of return, the lowest production cost of any mine and in the world. So from that perspective, we've got some really fantastic value drivers that I don't think is being recognized in the market today. On the development schedule, I mentioned we'll complete the feasibility study by the end of this year, early next year. We expect to get the preliminary license in Q1. Our construction license we expect between Q2 and Q3, and then we can be in construction mode. We'll start the clearing process in the Q2. So we expect to be in the construction mode by Q2 of 2023 and in production by Q4 of 2024. The nice thing, again, because of the ore quality, we're buying an off-the-shelf plant. And the reality is that it makes it cheap to buy, but it also means that we don't see any major issues with the metallurgy and tweaking the mineralization in order to maximize production. Lots of exploration potential. Looking at the main area right now that we have, and this is all at Serra Alta, as I mentioned, the 1.3 million ounces are all at Serra Alta. Serra Alta is basically, this is the east zone that has about 800,000 ounces over 300 meters. We announced in December the acquisition of Goga de Onça. This is about 200 meters away from where we are. And we see this as a highly prospective area to come in and develop as we move forward. And we probably have about a kilometer of a stretch of land going to the north here. So from that perspective, lots of room for expansion growth. In terms of the other satellite deposits, Section A is Serra Alta, and at Serra Alta we have the capability to again expand to the north, expand to the south, expand to the west. We also have the areas of Baru and Fartura. These are very much lookalikes to Serra Alta. We just haven't been able to put a lot of drill holes into it. We probably have about 2,000 to 3,000 meters in each of these areas. When we acquired Serra Alta, it had about 6,000 meters into it. So we had a little bit more meat on the bone to digest. But what we're doing now, what we did in 2021, we had about 8 or 9 targets. And what we did is we prioritized. So now we have 5 targets. That doesn't mean that the other 4 targets are gone, but we're going to prioritize these targets for now, get some density in terms of the drilling, and we hope to see a really significant expansion of the resource. I'll mention that this deposit was brought to us by 2 friends of ours who basically are very significant geologists in Brazil. They are the discoverers of the Volta Grande project of Belo Sun. Volta Grande is the largest undeveloped asset in gold deposit in Brazil with about 7.4 million ounces. It's a good project. Unfortunately, it's in the middle of the Amazon, which has caused some problems. But at the same point, these geologists took it from scratch and built it into a 7.4 million ounce deposit. And when they came to us, they think that this project has similarly capabilities to what they saw at Volta Grande. So we're very optimistic for the future in Brazil. If I look at Argentina, I mentioned we bought this project in a fantastic gold belt. We're talking here about 1,500 miles southeast of Buenos Aires in Patagonia, in an area called the Deseado Massif. This is a classic epithermal system with low sulfidization, very similar to what you see in Nevada. But the big difference here is that you have very little exploration compared to Nevada. So basically, if you look at this land mass that we have, it's 334,000 hectares. Now, there's going to be a lot of moose pasture there, I don't deny. But the reality is that for a small junior company like ours to hold such a major belt is pretty significant. What you're looking at to our east, we have Cerrado Gold, which is owned by Yamana. They produce about 250,000 ounces a year. Our Chispas property is directly adjacent to their Nati discovery, which they hold great faith in. So we see great opportunity there. If you look down at our Michelle property, we're directly on the border with Cerro Vanguardia, which is Anglo Gold's project. This project has produced 8.9 million ounces and 140 million pounds of silver since the early 90s. We are directly on their border, and we're just starting a program that I'll talk to you about in a moment, but highly prospective. To our northwest, you have Cerro Negro, which is Newmont's property, producing around 350,000 ounces. And very recently, about less than a month ago, Barrick came into the state, which is Santa Cruz. Santa Cruz province is actually one of the best mining jurisdictions in the sense that it's had very little interference from the government and has had very little shutdowns due to anything. And so we think that what you're going to see over time is you're going to see a lot more companies coming down here. And as I mentioned, Barrick came in. They actually acquired a interest in an exploration venture with a company called Latin Metals. They have a project that's right here between our Chispas and La Cisnes property, and then they also have 3 projects up to the west. We knew Barrick were coming to town. We expect they're going to come to town in a bigger way over time. So it's going to be very interesting to see what happens. I mentioned, that basically there's been $120 million expended in the project. So we acquired a project that had production already. In 2018 and 2019, they produced around 24,000 ounces. We've come in and in a really terrible COVID period, we bought the project in March of 20. So we've spent about a year and a half restructuring it into the third quarter of last year. We felt we could have done that in a year without COVID, but even groups like Yamana and Anglo, their production was down by about 75% during the COVID period. So we were significantly impacted, but we've done some great things. We brought the feed grade up, which was critical, from 2 grams to 4.7 grams. We increased this throughput from 900 tons to 1,200 tons per day, improved recoveries, reduced their costs fairly significantly. And now we're in a very comfortable position that we can generate that 50,000 ounces a year at that. This year, probably a little bit more expensive because we're going to do some extra drilling, but probably in that $1,100 range, which means at $1,800 gold, we're throwing off, $30 million or so in free cash. So an extremely profitable venture, and we think it's only going to get better. So right now, here's our land position. We're actually focused on mining from here and from here. Our plant is here. We have a 1,000 ton per day nameplate CIL plant, which is Notokumpu, a brand new plant, really nice facility. What we've learned in the last 2 years since we acquired the project is these 2 areas, they're open pit mining. Average grade is about just under 5 grams. So very high grade for open pit mining. But what we've also found through our exploration efforts is that there's a lot of lower grade material in here and in here. What we're seeing is the ability to actually run, to split the production stream into 2. On the one hand, have anything from 1.6 grams and above going through the plant. But now what we're going to do is we're going to introduce a heap leach operation to the north, which basically will have anything that's between 1.6 grams and 0.3 grams. And we'll introduce that in 2020. That'll start production in January of 2023, and we'll produce about 20,000 ounces. And then in 2024, we're targeting the same thing here. So that'll bring in about 40,000 ounces from the heap leach operation. And we think that's very significant for our growth moving forward. From that perspective, we see a lot of potential growth in the production profile that we have. And as I mentioned, here we are, this Paloma area is producing at around 8 to 10 grams. Down at Martinez's, we're producing somewhere in the region of about 3 to 5 grams, combined running about 5.25 grams. So very healthy open pit, but a fairly significant strip ratio. In terms of moving forward on the exploration, I mentioned to you Calandrias to the north. We're also looking at Martinez's on the lower grade stream, but a very significant, here's Calandrias, where we see, the additional for the immediate heap leach potential. What's interesting here is that, this area is high grade, and this project has never seen any drilling below 200 meters. So what we're looking at is we're looking at going down below the pit that we have today to see significant potential resources. And we're now looking at going down from the pit surface down to pits about 125 meters, and we're looking to carry that down in the short term down to about 325 meters. From that perspective, we think we're going to add significant resources here that we can start our underground operations. And here's the drill program that we have planned this year. So that for us is very interesting. Most of the mines on the belt, they all started as open pit deposits, and then they worked their way underground. So from that perspective, we're looking at the lower grade material for the heap leach opportunity, and this material coming out of the underground, we anticipate being in the 10 grams per ton mark. So we're looking for good high grade to feed into our plant. I'm just going to step back on one element here too. We are starting a program at Michelle. This is a very large property that we have. As you can see, we are directly adjacent to Cerro Vanguardia. This is the Anglo project that basically produced about 8.9 million ounces to date. What's interesting here is that we're just starting our program, but they have their major discovery called Mia. Sorry, let me take one step back. So there's a company called E2 Metals in Australia that has this land position here. And basically what they've got a market cap of about $40 million. They announced last week that an $8.5 million funding that Eric Sprott put $3 million into. But what's really interesting is their major discovery that they have called Mia is right on our border. It's 25 meters from our land position. And what we believe is that deposit actually extends significantly into our territory. And what's also interesting is that looking at the vein structure that we have for Cerro Vanguardia, it runs southeast to northwest. And from that perspective, we think that we're going to see some significant exploration success coming there in the near term. If successful, we're also looking at this area here, which is Chispas and Las Cisnes, and we expect to see some pretty interesting results coming there. So lots of growth opportunity in Argentina as well. The one issue with Argentina is that they have currency controls. With regard to how we view the operations in Argentina, it funds itself. We look at that as a standalone asset that basically covers its own costs, funds its own development, but hopefully grows into a very substantive operation. And I think those currency controls within a couple of years are going to change. Either one, they go away, which will be fantastic for everybody, or two, what will happen is they'll remain. And I think what that'll mean is that with 50% inflation in Argentina, you can't just leave money in the bank. What it means is that you'll have to have all your US dollars. There's no refining in Argentina. So you have to, if you want to refine your gold, you have to ship it abroad and then bring it back in US dollars. And then what happens is that you have this excess cash that you have to sit on. And the view that we have here is that I think that if exchange controls don't go away, you're going to see majors. The first step that they'll take is to develop and grow their own operations. And then what they'll do is they'll optimize their own operations. And at a point, that'll generate more revenue, more cash that they won't know what to do with. And I think you're going to see a fairly significant acquisition, a period of M&A and taking place in Argentina, which would be very interesting for people like ourselves and others. So I think that opportunity exists in Argentina over the next little while. With respect to our market cap and structure, we're trading about just over $115 million. At this point, we view that as a substantial discount to our peer group. I think to a large extent, we're largely unknown. We do have coverage from Tim Lee at Red Cloud, as well as Haywood and Cormark and Argus. We are starting to get the name out there. We've got a very good share structure in the sense that management and directors own 40% of the company. We've got about 30% held by institutions and the balance held by retail. Our hope that is, as we grow, is we'll grow that institutional base as they get to know the company and as they become more comfortable with what we're doing. So in summary, what we're looking at is we've got two really strong production growth assets, Brazil and Argentina. We're generating a lot of cash. Cash is king for us, and when we get Brazil up and going, that's 150 million a year on top of hypothetically 50-60 million out of Argentina. It's very, very strong. We've got a strong team that's brought assets to production in Brazil, in Latin America. So we're very comfortable with the capacity of the team to drive these projects. And most importantly, even since 2017 or 18, when we were private, shareholders have done very well here. But at the same point, we're still at the beginning of our growth curve. And I think that's a tremendous opportunity for investors today to get on board to the Cerrado story. So that's a conclusion of my overview of Cerrado. I'd like to thank you very much and hope I didn't overload you with information.
Great. Thank you very much, Mark, for a very informative presentation. We'll now start the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. And we already do have a few questions. First, kind of looking at the metallurgy, I believe for Monte do Carmo. What would be the process sequence? And there's kind of a follow-up question. Have you considered, I think, pressure oxidation as an alternative for the process?
No, you know what? First of all, I got to say very emphatically, I'm not a metallurgist, and what I may say is dangerous. And so I'll stick to my guidelines. But what we find is that the and in the presentation that you can find online, there is the flow chart of the metallurgy, and there are on the website. There are also some there are results of the metallurgical testing that we've done. So there's a complete breakdown of fairly sophisticated processes that we've undertaken. But what I'm led to believe, again, is that it's just a very it's a coarse gold. It's very simplistic to separate. The leaching and flotation process is very simple. So I haven't had any instances where people have recommended any other form of any other form of processing aside from this fairly simple flow chart that we have.
Great. And could you describe a little bit more about the prospective satellite targets that you've been looking at and drilling at Monte do Carmo, and especially the newly acquired ground to the north of Serra Alta there?
Yeah, where we have found most success is we found most success where we're focused on hydrothermally altered granites and sheared vein structures, and basically that's also interspersed with veinlets. And basically sulfide veinlets, but the gold is not interstitial to the sulfide veins. And what we find is that, when we're looking where we're being most successful is being between the contact point between the granites and the felsic volcanics. What we find is, there's quartzite as well. What we find is that the quartzite is actually eroded, and so the gold is largely being leached and diluted. And so really what we've been focusing on is focusing on the contact point between the felsic volcanics and the granites. And basically we've got it. You can see on the presentation that we have about a 7 or 8 kilometer stretch around the horn, let's call it, around the Serra Alta horn, that we have to go and really find out where the best endowment of gold is, and a little bit it's kind of like a needle in a haystack, but at the same point, that's what drilling's for, and that's what we've been up to. As it relates specifically to Gogodansa, basically Gogodansa we acquired in an auction in December. It was published in the Gazette in February, so we really just got onto the property. But it's an area that we've tried to buy for the last 4 years, and we're very excited because it's only 200 kilometers away from that east zone, which is where we have 800,000 ounces, so 200 meters, not kilometers, excuse me. And so from that regard, what we're looking at is we think that's highly prospective, and we will have a drill. We've done some trenching, we've done some mapping. Our objective will be to have rigs on the property, on that specific property, by mid-April. So from there, we're looking. We have high hopes for it, and we'll see how that goes. With regard to the area along that corridor that I mentioned, that 7-kilometer corridor, basically what we're looking at is we had about 5 candidates there, and we had an additional 4 candidates of exploration outside of there. And the reality is that we've ended up with the 5 candidates that we have as what we believe is the best opportunity. But I think in terms of it's very early days for us. We've only drilled outside of the infill drilling we're doing right now. There's only been 50,000 meters of drilling on this property at Cerro Alta. So we've done very little drilling in terms of the yield and in terms of our resource acquisition.
And kind of following up on that, if you do have exploration success there, and obviously it depends on the mine plan ultimately optimizing, but would that more likely extend the mine life, or would you look at bringing some of those things further forward, I guess, in the mine life?
Well, if you look at the production profile, again, the first 5 years average is 150. We have in 25 a period where we're starting to ramp up. In 26 we produce in 25 we have the ramp up. In 26 we're at about 176,000 ounces. In 27 we're producing over 200,000 ounces. I think what we would look to do is maintain, probably extend that 200,000 ounces for production kind of profile as long as we can, and so it would not mean that we'd have to trade up in terms of our equipment and whatever. I think for now, the objective would be extend that mine life beyond the 8 years, and then see what happens from there. I think I'd be much more comfortable having a 10-year plus mine life, and I'm pretty comfortable now that we're probably in our resource we're comfortably over that. But at the same point, I think we need to I think that would be the first step. Extend the mine life at that 200,000 ounces per year. And then if we're lucky enough to get more ounces, then we can consider the situation of maybe expanding production or whatnot.
Great. And shifting a bit to Argentina, as you said, you have plans to add a heap leach component. But if you have further exploration success, would you also look to potentially expand the mill? It is relatively modest size for an open pit operation.
It is, but again, but remember, this open pit that you're feeding it right now is north of 1.6 grams, right? And as you can see by what we publish in our latest production numbers, we're producing at about 4.7 grams. So for an open pit, it's very, very high grade. In terms of what the objective is to produce, obviously anything above 1.6 grams goes into the plant. I think for now we're running it at 1,200 tons a day. We have run it up as high as 1,300 tons a day. So I don't think we're prepared at this point to look at the expansion of the plant. But I think at the same point, bringing in the heap leach is a very good augmentation for the project. We did the same thing with Yamana, with the Desert Sun project that basically Yamana bought from us, and basically, when Anglo had mined that, they were mining like a meter vein, and basically what the strategy that we took when we went there was to say, okay, well, it's high grade for a meter, but you can actually expand it to a 3 meter vein, and then by doing that, what you're doing is you're diluting it, but you're adding a lot more tonnage. And that's kind of the strategy that we're taking here by adding this lower grade stream. It's still not a low grade stream. I think the average is going to be north of 0.8 grams, you know? So from that regard, for a lower grade stream, it's pretty healthy.
Great. And kind of stepping back a little and looking more broadly at Argentina and where you operate. Obviously, it's an area where there's a lot of operating companies, but are there any challenges to operating in Argentina? Or actually, there's been some news from a different province, from Chubut province, that they had approved mining in a big project there. Are there winds turning more favorable there?
You saw South 32 they came into Argentina in the fall of last year. Lundin announced they were going to a project in San Juan about a month ago. Again, I think you're seeing, and frankly, in Argentina, what's of note is that it's one of the largest lithium producing nations, and you see a lot of attractive lithium companies coming into Argentina. So people aren't shy to come into Argentina because of the resource endowment. What's more complex is obviously the macro situation, the fact that you're running an inflation rate of 50%. But in terms of the for us, the most constraining factor is the currency controls that I mentioned earlier. The government are focused and they've come out very strongly in favor of the mining community. They need U.S. dollars. They need to produce U.S. dollars, which the mining sector, they're looking to the mining sector to provide. But in terms of it's not the easiest jurisdiction, but at the same point, the resource wealth is substantial.
Great, absolutely. Great. Well, I think that's all the questions we had submitted. I guess obviously you had gone over it, but just kind of a general question, and just to review, what news would we expect to have from Cerrado over the coming weeks and months?
Well, you may have seen, last week we announced a transaction with Sprott Stream and Royalty. Basically, they bought a 2.25% stream out of our Brazilian operation for $20 million. The nice thing there is it provided us with funding to the construction stage, and so that's very encouraging. It makes us self-sufficient in our capability for not requiring capital. But we've been working on some other initiatives that I hope will come to light in the next 45 days or so, 60 days, that I think are going to be truly exciting and will really change, I think, the way that people perceive Cerrado. But that said, we should see asset growth, development of our projects. We're very excited. It's still very much in its infancy, but we're very excited by the prospects that we have.
Great. Well, I'd like to thank you again, Mark, for presenting today, and thank you everyone out there for tuning in. Just a reminder that Red Cloud Securities will be back tomorrow afternoon, Wednesday, March 23rd, when our webinar series continues with Pilar Gold at 2 p.m. Eastern. Have a great rest of your day.